now joined by Mr. Vikas Chadha, Managing Director at TVS Supply Chain Solutions, now joining us. Mr. Chadha, morning, Shesha here, and thank you for taking your time out. And first of all, congratulations on this MOU that you've signed with the Japanese headquartered logistics and engineering company Sankyu Inc. If you can take us through the benefits that you foresee as a result of this MOU, and what really is the vision? Why has this MOU been signed?
Yeah, Shesha, first of all, thank you for having me on your show. I would like to start by saying that our partner, Sankyu, its meaning in Japanese is actually thank you. So literally, thank you. This is, I think, a very historic moment for both the companies. TVS and Sankyu both are 100-year-old organizations which have common approach and philosophy towards employees, customers, ethics. And with this partnership, we will be expanding our adjacent space in supply chain solutions because Sankyu has capability to do engineering services, installation, and maintenance for the advanced manufacturing and core manufacturing sectors. So this allows TVS Supply Chain Solution to play a much bigger and a much larger role with our customers. Now, we can start conceptualizing their new plants as they are setting up for engineering purposes. We can deploy the whole plant, and then we can maintain the plant. So this goes way beyond traditional supply chain solutions, and hence I think it's a big moment for us, and we are extremely proud of it.
A big moment for you, and the stock is also up nearly 7.5%, so your investors clearly see some value in this MOU. But if you can share some more details, any specific sectors that you're targeting? It could be auto, steel, semiconductors. Where do you see the earliest and largest revenue opportunity that could come up as a result of this partnership?
Yeah, so Shesha, I mean, we all know how much focus the Indian government is having on manufacturing sector, which today is 17 to 18% of the GDP. Within the manufacturing sector, the engineering services is estimated to be around 170, 180 billion US dollars per year. Even if 10% of that is supply chain, we are looking at a fairly large market of 16 to 17 billion, which we will play in. Now, so hence, for us, the opportunity is very huge, and it'll be a unique one and the only kind companies which can not only provide, logistics services, supply chain solutions, but also get into engineering services with our customers. So we have set up a steering committee, both with the members from Sankyu Japan and India and our company. The intention of the committee is to, in 3 months, to finalize a business plan as to how do we go and meet our customers, how do we approach them with the solution. So at this moment, I cannot put a number, but I've shared with you that the opportunity is very, very huge. And it is a unique offering because none of the other companies in this space, supply chain solution space, have the ability to offer engineering solutions and aftermarket maintenance support. So we have already been talking to customers, and to answer your other question, which is which verticals or which sectors, so largely the focus is going to be on advanced manufacturing, but also the core sectors such as steel and oil and gas will be our target sectors. I would also like to remind that, as TVS Supply Chain Solutions, we've also earlier entered into a joint venture with ALA Group Italy, which is more focused towards aerospace and defense. So I think as an approach, as a philosophy, our company is going across in terms of adding adjacent capabilities, going to new verticals, and bringing speed and quality in these adjacent offerings to our customers.
Clearly, there's a lot of opportunity, and we'll perhaps interact again in the future as well, as and when you can quantify. But for now, Sankyu has also intended to acquire 0.5% equity stake in TVS Supply Chain Solutions. Have the discussions begun with respect to the valuations at which this acquisition will happen and when it will happen?
So I think, first of all, it is very great that this is not only happening as a business collaboration, but also as an investment. This just highlights the seriousness, the robustness of the association and partnership between the two companies, which is at a shareholder level as well. Sankyu Inc., Japan, will invest into TVS Supply Chain Solutions, and they are in the process of taking regulatory approvals regarding the necessary. So I can't comment on the timelines, but I can say that it's going to be in the very, very near future as soon as they get the regulatory approvals. And as far as the pricing is concerned, it will be obviously at the market pricing.
Okay, so valuation will be based as the market price. But does the MOU, Mr. Chadha, contemplate any further stake increase as the partnership deepens over a period of time?
Our initial focus is completely on expanding the business because that is where we see more value, not only for the company, but also for the consumers. Having said that, as the relationship between the two companies gets further strengthened, as we get more traction from the market, all of these discussions will happen. At this moment, the focus is to get to engineering services within the manufacturing sector for the Indian consumers and also for the global MNCs.
So that's as far as the partnership is concerned. But let's also talk about your FY27 revenue guidance. And earlier you had said that you're targeting double-digit to early teen% growth on a year-on-year basis. Now with this MOU, does this change, or perhaps the benefits of MOU will accrue over a period of time and this remains intact?
Yeah, because of the robust Q1 performance that we had, we have already changed our guidance to mid-teens to high teens, actually. So we are very comfortable with that because Q1 we grew at 28%. And with the strong pipeline that we have and with so many new wins that we have generated, we are very confident about the overall FY27 performance. As far as this MOU and this partnership is concerned, anything out of this is going to be purely incremental. Nothing in the current estimates have been baked because of this, because as I said, this is a completely new market and a new capability. And we will have to understand this fully and then go ahead and deploy it. So I think there's going to be a huge upside out of this. But I would say largely the upside should be in FY28 onwards, but maybe some spillover in second half of FY27.
Okay, and I understand it is too premature and difficult, but can you quantify, if not FY27, what could the incremental benefit in FY28 be?
Very difficult for me to quantify at this stage as to what the benefit will be. But all I can say that, given the focus of the Indian government on the manufacturing sector and our sizing of the industry, engineering services is around 160 billion USD. So 10% is supply chain, 15-16 billion. I mean, you can imagine, even if we get a very small share out of it, I think we're talking of a very big number. So we are really very excited out of this. And I think in a 3 months time frame, when we talk, I'll have a better answer for you as to the impact of this in FY28.
Okay, perhaps we'll interact more often to get a sense of what the revenue pipeline could look like going forward. But Mr. Chadha, thank you so much for taking your time out and joining us here on ET Now. The stock, of course, is up 7% in trade. Thank you for joining us today.
Thank you for having me here. Thank you. And